So there's also
Yes, please.
so the I don't know what is
Uh-huh.
I think where your so the one person who has given Mr. Radharamana,
Mm-hmm.
who had given his answer as 53.33, also gives another comment saying that if it is comparison among group, we will take EBIT that is 80%.
No, no, this is not a comparison among a group. Or if, okay, you can even assume that this is a comparison among the groups is perfectly fine. So in any which way you want to calculate this number.
Just to clarify, what I meant was
Yes.
standalone. If I am looking at it, I look at the net profit.
Mm-hmm.
But if I am looking at, for instance, it's a startup,
Huh.
there may be tax benefits in some, there may not be tax benefits in some. So just to beat out all that, I will take the EBIT, in which case it will be 80%.
Okay, okay, that's fine.
Depends on in which scenario I am in, based on that I will.
Perfect, absolutely perfect, absolutely perfect. Okay. Any more response, Geeta ji?
No, sir.
Okay, no, okay. So very good. I think this is absolutely fantastic. Now let's look at, friends, what is capital employed and what is investment. Uh, I have had the opportunity of delivering this program in more than 50 locations across the globe to all kinds of audiences. I have delivered these programs for the board level, for chartered accountants, cost accountants, company secretaries, MBAs, middle level executives, top level executives across the globe. And I have realized that invariably there is a confusion about this KPI, that is return on capital employed. Let us look at that this KPI and understand as to what that confusion is and how do we ensure that the companies on whose board we are there, these companies bring out this KPI regularly and in the correct position. So what this KPI is, उसके पहले हम समझते हैं कि capital employed क्या है and investment क्या है, are they same? So, capital employed, we all know, is very simple. Employed is money that you bring into the business is capital employed. Money that you bring into the business is capital employed. And what is investment? Investment is what you do with this money. What you do with this money. So when I start a new business, what do? I bring capital. I bring capital in the form of debt and I bring capital in the form of equity. So let's say, for example, I'm starting a new business, new company. I have brought 100 crore by way of equity and I have brought 200 crore by way of debt. So what is the capital employed of this company? The capital employed of this company is 100 plus 200 crore, and that is 300 crore. So capital employed is nothing money that we bring into the business, but we need to remember when we are calculating this ratio, of course you can calculate it in many variations, but primarily when you are calculating the capital employed, you will always take into account the long-term sources and not the short-term. So the borrowing that we have for the purpose of working capital will not form part of the capital employed. So return on capital employed, very simple. Money that you bring into the business is capital employed. What is investment? Investment is what you do with this money. तो जब आपने 300 करोड़ डाल के कंपनी चालू करी, तो 300 करोड़ जो आप बिजनेस में लेके आए हैं, जो कि आपकी कैपिटल एम्प्लॉयड है, इस 300 करोड़ से आप क्या करोगे? व्हाट विल यू डू विद दिस 300 करोड़? With this 300 crore, you will make investment. Investment in what? Investment in land. On the land, you will construct the building. Inside the building, you will put plant and machinery. And for running that plant and machinery and producing goods from that plant and machinery, you will also purchase raw material. So these are your investment. So it's very simple. Capital employed का मतलब क्या है? Capital employed का मतलब है money that you bring into the business. और investment का मतलब क्या है? Investment का मतलब ये है what you do with that money. Now, so if I what does the ROCE tells me as an indicator? What does the ROCE, return on capital employed, tells me as a KPI? So ROCE tells me as a business what return I am giving to the people who have given me capital. right? So what return on capital employed? तो रिटर्न ऑन कैपिटल एम्प्लॉयड हमको क्या बताता है? रिटर्न ऑन कैपिटल एम्प्लॉयड टेल्स अस व्हाट रिटर्न आई एम अर्निंग फॉर द पीपल who have given me the capital. It is really speaking as simple as that. Obviously, higher the ROCE, better it is for the company. It is an indicator of better performance of a company. If the ROCE of a company is increasing year after year or quarter after quarter, it is even better sign. That means company's performance is good and which is reflecting in the higher return on capital employed quarter after quarter or year after year. Now, having understood what is return on capital employed, and I am repeating purposely, return on capital employed tells me as a business what return I am giving to the people who have given me capital, and that is what is return on capital employed. So अब अगर मुझे return on capital employed calculate करना है, how will I calculate it? I will calculate return divided by capital employed into 100. So this is the formula that I will use for the purpose of calculating this KPI. Now the question is, what is my capital employed? So my capital employed, of course, my capital employed, as we have discussed, is equal to equity plus debt. So that means what? That means if I have to calculate my return on capital employed, what do I need to do? I need to put in the bottom, in the numerator, the equity, which is how much? 125. And debt, which is how much? Which is 250. So this is my capital employed. Now what should I take in the numerator? Should I take in the numerator profit after tax, or should I take in the numerator EBIT, or should I take in the numerator EBT? What I need to take in my numerator is very simple. I am calculating return on capital employed. Meaning what? Meaning I am trying to find out what return I am giving in as a business to the people who have given me the capital. Who are the people who have given me the capital? My shareholders have given me the capital. My lenders have given me the capital. So what I need to put in the numerator? I need to put in the numerator, number one, the finance cost, because this is what I have given to the lenders. This is the return that I have given to the lenders. So my numerator firstly will comprise of the finance cost. Secondly, it will comprise of the profit after tax, and that is 200. And why 200? Because this profit after tax that I have earned it for the shareholders. So how will I calculate my ROCE? I will calculate my ROCE 225 divided by 375 into 100, and that is what is going to be my return on capital employed. So meaning what? What will be my return? What will be my ROCE in this case? It is going to be 60%. It is going to be 60%. So in case if anyone has a question, please go ahead. Else we will move to the next one.